A lot of these companies that are out there that are pretty much saying that they can get you X amount of money are not telling you how they're actually doing it or how it's actually being set up. And so if you're setting up your own funding sequence, and again, I won't get ahead of myself because we're going to get juicy with this here coming up. But if you really want to, if you really want to set up your own funding sequence, you want to know, are they underwriting themselves? One of the easiest ways for you to find that out is when you click on the application, does it take you to a third-party servicer? Does it take you to a credit rewards page, which is going to be kind of like their own in-house network? Does it take you to Elon Financial? Excuse me. Does it take you to Elon Financial? If you're going to Elon Financial and you're trying to get 4 cards at 4 different banks, quote unquote, and you pop that application up, you're landing inside of the same funding pool. You're going to shoot yourself in the foot. However, if I go and I open an application, I know that Bank of America, I know that US Bank, I know that as much as we don't like them, Wells Fargo, and I know that Chase, they are all going to have their own lending pools, meaning I'm not going to land inside of that. And as a matter of fact, if you are applying for a ton of Elon Financial cards, just know that they're a subsidiary of US Bank. US Bank actually owns Elon Financial. So something to keep in mind, right?
Yep.
So when you're setting that up, you don't want to land in the same pool, because what ends up happening is you end up getting flagged in the system. So preferably 0% business credit cards that have their own, again, criteria with them. And again, we'll take a deep dive into this. Banks with business credit pre-approvals, I love it. Bank of America offers it. Wells Fargo's kind of been playing around with it. Citibank, not City National, Citibank plays around with it, even though they're more on the personal side. And then obviously we have American Express. They give you that. And then banks with most liquidity in the account, meaning the bank that you have the most money with. Now, bank ratings, because this is super important. I capped it at a 3, because anything under a 3, it goes low 3, it goes mid 3, low 3. It's not worth your time. You want to be sitting at least a mid 4 to a mid 5. That's where you want to sit. Baseline is going to be low 4. This means that how much money you have sitting inside of your business account on the daily average over the last 90 days without having a withdrawal. If you withdraw, or I'm sorry, withdraw an overdraft. Sorry, an overdraft. If you overdraft within that 90-day window, you're going to want to restart that clock, because it's going to plummet your bank rating. And so in the last 90 days, this is the floating average. This is how they're going to rate it. This is why we like to work in windows of 30, 60, 90 days with banks, because you have this right here. So let's say if I'm going into Chase and I have $8,000 that I have with them, I'm going to make some nice, transactions. I'm going to make it look smooth. And then by like day 30, I'm going to want to start potentially applying for a card or maybe, card, business line of credit. You'd have to be over 2 years with them. So a card with Chase. And at that point, you're sitting far better than if you just try to do it off of day 1 without any liquidity in the account. You guys going to say on that?
In the words of IRV Official, you want to go into the bank and say, I'm looking to make a hefty deposit or a handsome deposit. And this is what you're looking for, is that mid 4 to the mid 4 and up, preferably high 4. Yep. And basically you want to make that initial deposit. And then what you want to do is you want to move everything to that bank for all of your transactions, right? So when you're focusing on a bank to get funding, you need to show them that you're a business partner. Okay. Right now we're in this fractional banking system where if you lend 100, they can lend 1,000, right? So if you give them 100, they can lend 1,000 as of right now until these banks collapse. Hopefully they don't collapse, but we're having a big liquidity crisis. Bottom line is that hefty deposit is nice, but they want to see, are you an active partner of the bank? Are you a resource for the bank? Why should we lend to you if you're not putting money into the bank? Not just sitting in a pot of gold, knowing that you're going to, try to get funding and then bounce, right? You need to add something to the relationships. Banks are relationships. Relationship banking is not just dating them before you marry, but also proving that you're an actual business partner of theirs. So when you do that initial bank deposit, that's a huge internal score. But the other thing is do you have direct deposits? Do you have ACHs going on? What are you doing? One of the things that you can also do too is your ADP. Okay, that's a whole nother play involved in that down the road that we might discuss. We'll see how things go. There's a lot to cover in this business credit mastermind. But the bottom line is don't try to go after all these banks at one time. Pick 1, 2, or 3 at the most, and then just focus on those 3. But you also need to know, where are they pulling your personal credit from? Because if you're dealing with Wells Fargo and then you're dealing with, you know, Fresno, like these are two different banks going on, right? So like you guys need to know who are they pulling from, so that way when I go for funding and they pull from my personal credit, they're not all pulling from Equifax, or they're not all pulling from Experian. And then also knowing, are they pulling at also a business credit bureau? And if so, what are they looking for on that business bureau? So that is why data, write this down, data is the new oil.
Yep.
Data is the new oil. If you had the data, you would be a multimillionaire right now. You don't have enough data to be a multimillionaire right now, because if you did, you'd walk out that data, you'd implement, and you'd be that, right? So we're all on the quest for information, putting the pieces together. This right here, this 4-week series is going to give you all of the pieces to the puzzle. Then you just have to execute. My biggest thing that I would say is don't go listen to all these other voices to confuse the hell out of you. If you like this group, if you like what we stand for, if you like our approach, stick with this model, okay? Put your blinders on, cover your ears, okay? You need to actually protect your brain, eyes, and heart here, because there's going to be so many people in this industry saying, oh, I can get you $250,000 in funding easy, or I can do this, I can do that. They could be putting fraud on your apps. They could be shotgunning your apps out. They could literally not care about anything, just getting a high percentage from you. And most of these things are business credit cards with Elon Financial. Listen, all of these people are doing business credit cards at 0% with relationship bankers. It's business credit cards. And if they say all this non-PG shit, it's all fluff. Don't believe it. Okay. Yeah, I like people. I'm not attacking people personally, but the business principles is they're using marketing to get their verbiage right, so that way they can get clients. It is all bullshit. Okay. These are business credit cards that you can literally get yourself by watching my YouTube videos, Irv's YouTube videos, or any Credit Plug's YouTube. Credit Plug could get you more funding than both of us combined. Okay. Because you put out more videos on institutions. Okay. It's all business credit cards at 0%, Elon Financial. There you go. There's the gem. There's the mic drop. Take over, bro.
All right. We'll take it a step further. So it's so I'll give you guys like the regions, even though we're going to be covering that in the next couple of weeks, because Rad got us amped up.
I'm amped, bro.
So you have underwriting with the main banks. We're taking notes. I don't have a slide on this, but I'll promise I'll include it in the next slides for the next couple of weeks. You have the main banks for the national, right? Those are the ones like Bank of America, American Express, US Bank, Citi. They're all underwriting themselves. Next to that, you have Elon Financial. Elon Financial is going to cover the majority of like the credit unions and the small banks that you tend to see around town. Next behind that, you have TCM, which is Total Credit Management. That's going to be the next like group next to Elon Financial. Next to that, you have another region, which is HTLF. That's going to give you, and again, I'll give you guys the list when we get into it. That's going to give you a list of like 12 different regions. And then lastly, you have FNBO. Those are literally the top 5 banks that issue their own underwriting in terms of regions, or in terms of like their own database, their own system. If you guys can get that, you'll never need to like watch another piece of content, because you understand how the system flows and how it works. I hope that wasn't too geeky. Was that too geeky, Rad?
No, it's perfect.